Hey everyone, it's Brandon from the Young Investors Podcast. Myself and Hamish are excited to bring you your weekly rundown of the latest business and investing news from around the world. A quick reminder before we get started that any advice provided by myself is general and does not consider your financial situation, needs, or objectives, so consider whether it's right for you. Brandon Kolk is authorized to provide general financial product advice in Australia and is authorized representative 1305795 of Guideway Financial Services Proprietary Limited, AFSL 420367. Please see the description box for my financial services guide. Past performance is not a reliable indicator of future investment returns, but with that said, let's get into another episode of the Young Investors Podcast. All right, guys, welcome back to the Young Investors Podcast.
Ta-da.
Hamish, what's going on? We are back. Had a week off last week. What'd you get up to in your week of no podcasting?
Yeah, what did I get up to? I'm trying to think if I did anything noteworthy, but I can't think of anything. So
You worked hard.
yeah, clearly I was just just continuing to work on my videos. Nothing sticking out to me in my mind of interest that I did over the weekend or anything. But you've had a fun time holidaying and now sick, I believe, right?
Yeah.
Are you sick again?
Yeah. It was half fun. I went to Bali for a week. It was across my birthday. So a few of my mates in the friendship group, we have birthdays at similar times at the start of the year. So we kind of got everyone together and we went to Bali for a week to kind of celebrate because we're all turning 30 this year.
Crazy.
If you believe that. So my 20s
Frio.
are over, mate.
Yeah.
My 20s are over. Had a slight existential crisis, but that's all good.
Yeah.
And and then unfortunately on the way back I got sick. Although I wasn't the worst of my group. A few of us got sick, but one of my mates got dengue fever and had to go to hospital, which is really, really nasty. But not great. Those flipping mosquitoes, they get you.
Yeah, that's grim. Yeah, I feel like you came out not too bad after you told me that. You told me you were sick, and then I was like, oh, that sucks. But then you told me about your mate, and I was like, oh, yeah, you got the
Yeah, exactly.
he got the short
I'm getting
straw.
no sympathy now. I should just leave it as I'm sick. I'm sick. I tell everyone my mate went to hospital. They're like, oh, screw you, Brandon. How's your mate going?
Yeah.
Anyway, but yeah, we've had a couple weeks off, so we got a fair bit to catch up on. We'll
Yes.
try our best to get through all the stuff that's going on. We've got earnings just coming out left, right, and center. We've got stuff going on with tariffs and Trump, and we've got, of course, the Chinese branded AI ChatGPT coming out, DeepSeek or whatever it's called, and
Yep.
we got all of this happening. So lots to catch up on, Hamish. Lots
Yes.
to catch up on. I think it's going to be a big episode today. I feel we might be here for a while talking through everything, but
Yeah.
it should be good. I'm excited.
Exactly. With that said, today's episode is brought to you by Seeking Alpha, your one-stop shop for stock analysis, market data, and news. Access expert analysis and news for thousands of stocks. View buy, hold, and sell ratings from members, Wall Street analysts, and Seeking Alpha's own algorithm. Screen for stocks using a variety of fundamental and technical analysis metrics. Access 10 years of financial data and company filings, and manage your portfolio by tracking your investments with price alerts, so you never miss a buying opportunity again. Click the link in the episode description or head directly to seekingalpha.me/young investors to try Seeking Alpha free for 7 days. Do you want to start by taking us through some of these Trump tariff updates? Because this has probably been the main finance story, I guess, that's been we've been getting little updates here and there over the past few weeks as, of course, Trump has now taken office and seems to be fulfilling, at least to some extent, I guess, his promise to enforce some of these tariffs. So, yeah, tell us about what's been happening.
Yeah, the trade wars have most certainly begun. I saw something saying that a lot of former US presidents, they know that America has a lot of power, economic power, but they kind of choose not to wield it to the fullest extent of what they potentially could. Whereas Donald Trump has kind of come in and he's like, nope, I'm going for it, guys. And he is definitely wielding America's power in the global economy. We've seen a lot of tariff talk, and now some of that is really starting to materialize now that he's in office, or so we would think until recently, where things kind of flipped on their head once again. So I'll take you through it. So it says here, President Donald Trump has recently implemented significant tariff measures targeting Canada, Mexico, and China On February 1st, 2025, he signed executive orders imposing a 25% tariff on all imports from Canada and Mexico, with a 10% tariff on Canadian energy exports. Additionally, a 10% tariff was applied to all Chinese exports. And altogether, the US imported $1.2 trillion worth of goods from Canada, Mexico, and China combined in 2023. So the pool of, I guess, imports that applies to is not small. It is quite large. Yeah. So there's potential for this to have quite significant economic impacts. So the messaging out of the White House is straight from a White House kind of news release. Press release was that Donald Trump is taking bold action to hold Mexico, Canada, and China accountable to their promises of halting illegal immigration and stopping poisonous fentanyl and other drugs from flowing into our country. The orders make clear that the flow of contraband drugs like fentanyl to the United States through illicit distribution networks has created a national emergency, including a public health crisis. Chinese officials have failed to take the actions necessary to stem the flow of precursor chemicals to known criminal cartels and shut down money laundering by transnational criminal organizations. In addition, the Mexican drug trafficking organizations have an intolerable alliance with the government of Mexico. The government of Mexico has afforded safe havens for the cartels to engage in the manufacturing and transportation of dangerous narcotics, which collectively have led to the overdose deaths of hundreds of thousands of American victims. This alliance endangers the national security of the United States, and we must eradicate the influence of these dangerous cartels.
Right.
So they're not beat around the bush, are they? They're kind of being quite forceful with their words and also with their actions. And I guess while these tariffs are intended to address issues such as illegal immigration, the flow of fentanyl into the United States, as they spoke about in that conference, has raised concerns as well about potential economic impacts. The most notable, which is now being discussed quite widely, is increased consumer prices and the risk of escalating trade wars. So in response, for example, to this announcement, Canada and Mexico also announced retaliatory tariffs on US goods, and China has indicated plans to take the matter to the World Trade Organization. But in recent updates, Donald Trump has now agreed to hold off imposing the 25% tariffs on Canada and Mexico for 30 days, pulling the North American neighbors back from the brink of a potentially damaging trade war, the article says.
Right. Wait, so they've already kind of reached some kind of agreement to kind of push this back. So I guess it seems like, just to summarize a little bit, I guess it seems like, at least this is what's being presented, that, as you said, they're kind of being able to use the US's economic power, I guess, especially against some of these countries, to get get Mexico and get China to start to take a little bit more action in regards to kind of the illegal drug trade that's been coming through into the US. At least that's what's being kind of presented. And so they've reached some kind of a agreement.
Yeah, it's he's kind of used the power of the US economic position to just have some negotiating chips, and so far it's just kind of being used as negotiating chips because as you said, he did hold off. So he had, I can just read it here. After last minute calls with Trump, Canadian Prime Minister Justin Trudeau agreed to reinforce his country's border with the US to clamp down on migration and the flow of the deadly drug fentanyl. Earlier, Trump made a deal with Mexican President Claudia Sheinbaum. She agreed to reinforce the northern border with troops. In return, the US would limit the flow of guns into Mexico. But so they paused the tariffs on Canada and Mexico for 30 days to kind of reevaluate the situation. But a US tariff of 10% on Chinese imports has come into effect after a deadline on Tuesday passed. Shortly after, Beijing announced it was imposing retaliatory tariffs on a raft of American products, including 15% on coal and liquefied natural gas and 10% on crude oil and agricultural machinery. Trump earlier said he planned to speak on the phone with his Chinese counterpart soon. He described the 10% import taxes as the opening salvo and said they could become very, very substantial if no agreement is made. So, yeah, that's kind of the situation at the moment. It's a little bit of political jousting, a little bit of bargaining back and forth, a little bit of a couple of threats here and there, but so far just a little one on China. But it will be interesting to see if Donald Trump doesn't get his way, and Canada, Mexico, China don't bow to his wishes, and he does impose these big tariffs. What happens next when consumer prices do start to rise? That is my question, because I don't think it takes a genius to understand that when you impose tariffs, prices go up. And if there's one thing that kind of the Trump supporters don't want, it's prices to go up. He's kind of said, we're going to bring prices down. It's unbelievable. Biden and the inflation. Oh, it's terrible. So it'll be interesting to see how lenient they are if he imposes big tariffs and then prices do start to rise and inflation does start to come back.
Yeah, there's just so many question marks over all of this because, it's one thing to use tariffs as in some kind of economic war to push a country to reach a deal on a certain thing, but that's kind of like a short-term tactic. It's another thing to actually use tariffs as like a long-term economic plan, which also seems to be something Trump is interested in. He's spoken about wanting to get rid of the federal income tax and replace it with all kinds of import tariffs, and which is something that the US has done, in other times in the past. And so, that's going to be, that's obviously a completely different thing than just, using the threat of a tariff over a few week period or a few months period. What that means for prices and who ultimately pays taxes essentially in the US and who pays for the spending. So it's going to be very interesting. The effects of tariffs are, very widely, pretty widely understood. Businesses just pass those cost increases through to customers fairly directly. And so it would be shocking to see, big tariffs on Chinese imports not be reciprocated or followed by the prices of a lot of things going up a lot.
Yeah, definitely. So that's kind of the situation with the Trump's tariffs. It's a bit of a wait and see kind of story.
Yeah,
I'm sure a lot will change. Things will continue to change, but that's where we stand at the current time. We'll just see what does eventuate, what doesn't eventuate, and ultimately in the long term, what that means for consumer prices, I guess.
Yeah. Exactly.
All right. Well, I'm going to chuck that one over to you now, Hamish. Kind of transitioning, talking about China a little bit. Talk about some Chinese AI.
From one,
what's going on? I saw you did a video on DeepSeek. I haven't gotten around to watching it yet. I've just gotten back, but you've been doing some digging on this DeepSeek AI.
Yeah, well, I mean, this is another one of these US-China, I guess, economic wars that's been kind of going on. And has in particular heated up over the last couple of weeks. And we didn't do a podcast last week, so we kind of missed the main event that happened, which was a couple of weeks ago. But I thought I'd briefly cover it and then talk about some of the updates that have happened this week in regards to this AI race between the US and China, which up until now, this kind of AI race has really just been between US companies. You've had like Meta, you've got Meta with Meta AI, you've got Google with Gemini, you've got OpenAI with ChatGPT, you've got Anthropic has their Claude model. So it's all been these kind of US companies, and no one's really taken any of the Chinese AI companies seriously. And that, of course, all changed a couple of weeks ago, which I'm sure everybody's seen because it's been blasted everywhere with the launch of a new model out of a Chinese AI company called DeepSeek. So they released an open source AI model called DeepSeek R1. And this R1 model is a reasoning AI model, which is comparable to ChatGPT's O1 model, which is kind of their most recent flagship model, although there's kind of a new one, which I'll talk about in a second. And essentially this model is on par and even beating O1 in a variety of benchmarks, from reasoning to mathematics to science. And so it's very, very good, if not better, according to some benchmarks, than the best American models. And not only that, it was developed at a fraction of the cost. So it was, first of all, it's been, according to the company at least, it's been trained without the use of Nvidia's flagship H100 chips, which are these super expensive graphics chips that you can buy them on eBay for $40,000 a piece. And these are the chips that Meta and Microsoft and Google and OpenAI, all of them have
Tesla, all of them
have been buying tens of thousands, if not hundreds of thousands of these chips. For tens of billions of dollars. In total, I think it's over $100 billion that they've been spending on these particular chips. And supposedly this model has been developed without the use of these flagship chips. And beyond that, they said that the cost to basically train this model was just under $6 million, which is about a tenth of the expenditure that US tech giants have spent on developing some of their models. And it only took 2 months. So it took 2 months.
2 months.
A tenth of the price. And they didn't need all of this expensive hardware, which has been the main story behind, Nvidia's stock price, for example, which is, we're going to see Nvidia's earnings in a couple of weeks. And I think we're going to see that they will have data center revenue in the last quarter of, in the last year of over $100 billion, which is absolutely astronomical, up from, 2-3 billion pre-COVID.
Yeah.
And so, and almost all of that is just these really high-end chips. And now you've got this Chinese AI company coming out and saying, yeah, we didn't need those chips, and we did it for a tenth of the price, and it took 2 months. And it's comparable in terms of performance. And so that was the initial news that had a pretty dramatic impact on the stock market. I think it was the start of last week, which I'm sure many people kind of saw. There was $1 trillion wiped out from the market, and 600 billion of that was just Nvidia. So Nvidia took a massive hit.
I saw that happening with Nvidia, but I wasn't super tuned into what was going on at the time. But I did see that. That's absolutely unbelievable.
Yeah,
$600 billion in market cap, just whoosh.
Yeah.
Where'd it go? Sorry, it's gone.
Yep. Goodbye. Which is was significant. I think it pulled down. I mean, Nvidia's drop alone, I think, pulled the whole S&P down 1.5%. Which again, it's 1.5%. It's
my gosh.
It doesn't seem like that much, but it is kind of crazy. No,
that's huge.
And I mean, it is huge, but it is. It's crazy
that's one company out of 500.
Yeah,
has caused a 1.5% drop to the whole index. That is insane.
Yeah, it is crazy. Yeah. I'll get to a couple of the updates in terms of the competitive threat. Just to clarify why this is, why investors are so concerned about this. This model is completely free to use on their servers. You can go anyone can go and try it. It's also open source. Which means that if you have the right hardware, then you can just run it locally on your own computer, set your own parameters. You won't be restricted by any, restrictions that DeepSeek is. If you use DeepSeek on their servers, it's obviously going through China's the Great Firewall of China, and so there are some limitations to what you can ask it, but it's open source, and so It's fantastic for developers who can now access essentially the best model that's available for AI, and you can just mess around with it and create anything with it. OpenAI's comparable model, on the other hand, is not open source; it's closed source, and it's $200 a month for limited access. So it raises a lot of questions about how US tech companies will be making money from AI, because that's been the whole story is AI is so expensive to run and to build, and so the best model is always going to be controlled and run on Meta AI servers, or it's going to be run on Google servers or OpenAI servers, and you're going to have to pay a massive fee to use these models on their $100 billion infrastructure or whatever. But if that's not the case, if the source is just if the AI model is just open source and you can just download it, and eventually maybe you'll be able to run a pretty good model on a not so expensive computer in your house, then what's the business model for these businesses? And have these tech companies overspent on these expensive Nvidia chips? So what's the revenue streams for Nvidia look like in the future if there isn't this business model for
there's a pullback? Yeah.
So that's just kind of some of the question marks, I guess, that it raises. Obviously, nothing is definitive, and it's there's a lot of little things kind of coming out around this story. There's the question of whether DeepSeek was just straight up trained using ChatGPT as using its answers, which is something they call knowledge distillation. Straight up, essentially taking one model and sitting it in front of ChatGPT and just kind of farming it essentially to grow it. Which is something OpenAI is looking into, whether that's a kind of it is a violation of their terms of service. So they're kind of looking into whether that was the case. But there's a lot of little question marks around this, but it's still very, very interesting. The
whole time Sam Altman's just not disclosed. He's just saying, where's our main activity coming from? We've got a lot of users in China. It's a surprising number of users in China. Is that, should we look into that? Nah, we'll just keep that to ourselves.
It's not an issue, I do find that, the irony isn't lost though, in terms of OpenAI potentially suing DeepSeek for essentially intellectual property theft, when OpenAI almost certainly stole copyrighted information to build its own model. Yeah. So the irony of that is certainly not lost, but
it's ironic in so many ways. It's even ironic in the way that OpenAI, the reason it's called OpenAI is because the original mission statement was to open source artificial intelligence development, so that it wasn't kind of held, the power of artificial intelligence wasn't held by a company for profit.
Yeah.
That was kind of Elon Musk's original kind of idea with OpenAI. Develop it so everyone can see it. Everybody's on the same playing field because everyone can watch it being developed. And that certainly didn't eventuate, did it?
No.
It tells you a lot about humanity, I guess, but yeah.
It's hilarious. So those are the kind of the main things around DeepSeek. The good thing for us consumers is that it all of this kind of kicked OpenAI into action, and there's been a couple of things that they've been kind of holding back, that they were going to kind of drip feed us over the following year, that they've decided to release a little bit quicker now that there's a little bit more pressure on them. So they released a mini version of their new O3 reasoning model to all users, including people who just use the free accounts. And this model offers enhanced reasoning capabilities with adjustable effort levels to cater to various user needs. And then something I found quite interesting was they unveiled a new feature called Deep Research, which I don't know if they picked that name because it's similar to DeepSeek, but Deep Research uses their latest O3 model, and it's essentially an AI agent that is capable of completing multi-step research tasks. And so it's only available on the Pro plan at the moment, which is their $200 a month plan. But some of the demos look really interesting. So you can basically give it something to research, and rather than just kind of giving you a direct response to that question, it will actually go and do tens or hundreds of web searches itself, and look through sites and archives as an agent, and then put together an answer over, 10 minutes to 20 minutes. So it'll essentially go out and do research for you, which is an interesting case study of one type of ways, one of the ways that these AI agents will be potentially used, which I thought was quite fascinating.
I think the AI agent has big potential just to be like your assistant, really.
Yes. Yeah.
Like book me a haircut, try and figure out I want to go at this time on this day or roundabout,
Yeah.
Find a nice place for me to take my girlfriend for dinner on the lake, that kind of vibe.
Yeah, exactly.
You can just go off and do it.
Yeah, and eventually you'll just get the Tesla bot to take your girlfriend on the date, so you can keep
exactly.
so you can keep working.
Oh gosh,
no, I'm just kidding.
My girlfriend fell in love with my Tesla bot that was pretending to be me, and now I'm depressed.
That wasn't part of the plan.
That'll be the new line. It'll be the new line in the psychologist's room.
Yeah.
Well, you see, I didn't want to spend time with my wife, so I started getting my Tesla bot to take her places. And now my wife is in love with my Tesla bot.
Yeah. What a shame.
She doesn't love me anymore.
What a shame.
Yeah.
No, so it's all very interesting. It's all happening in the AI space. As I kind of spoke about in my video, it really does demonstrate, I think, why investing in these kinds of bleeding edge technologies is so difficult, because you can just get blindsided by some new advancements, in this case, potentially in the efficiency of running these models. You can just kind of get blindsided by these new developments all the time when it comes to these new industries. So you never really know, the companies that you think will be dominating, or in the way that they'll be dominating, or the way that these services will be provided will constantly change, and so it's very difficult to place bets, I think, in this space. I'll happily just watch from the sidelines.
It's so crazy that I remember just yesterday, ChatGPT 4 came out, not 4.0 or anything, just ChatGPT 4, and I'm actually on ChatGPT right now in the drop down of the different models.
Yeah,
and ChatGPT 4 is now only accessible through more models, and it says it's a legacy model. Yeah. So it's like actively trying to. It's like, forget it. Yeah. Don't use that one, guys.
Yeah.
It's like, that is the legacy. Don't touch that. We're almost getting rid of it, guys. It's it's crazy. I have to try this O3, because I've not tried it yet. So I guess you said that's the most up to date one. Right?
Yeah, so I think
O3.
they haven't released O3, I believe. I think they've only released O3 Mini. Is that right? Or have they actually?
Oh yes, that's the one I've got.
Yeah,
O3 Mini.
So they've got like they've basically got like a beta version, I guess you can use.
Right.
But yeah, I haven't tried using it either yet. But supposedly it's quite good.
Yeah.
So yeah.
All right. That's what a week for the world of AI. It's heating up. It'll be interesting to see, like, in time when this all plays out, to see what was actually the truth of this DeepSeek AI. Like, did they really train it without the H100s? Did they really not copy OpenAI? What's the truth? I feel like we're not 100% getting the truth at the moment. Hard to say, I think.
Well, I didn't even really kind of touch on that, but the reason why they believe it wasn't trained on those chips is because there are export controls. Nvidia is not allowed to sell them, and that's kind of supposed to be a national security thing. They're not supposed to sell the best version of their chips. However, that doesn't mean that they don't have access to them. And I think there was Atriok did a good video going through all of this, and what he spoke about was when the export controls went into place, you saw a lot of kind of land-connected countries around China see a massive increase in the purchase of these chips. And so one of them is Singapore. I think Singapore is like 12% of Nvidia's data center revenue. Just all of a sudden, it's like, so what's going on in Singapore?
What is happening in Singapore?
So it's entirely possible, and it's speculative, but it's possible. But the reason why Singapore's buying a bunch of these chips is because they're illegally selling them into China. And suddenly there's this business to buy them. And it's not that much of a stretch.
Nvidia chip laundering.
Yeah,
That's what it is.
Exactly. And so, obviously they can't publicly come out and say, yeah, we trained it on H100s, because that would imply that they've broken the rules. And so... we don't really know. There's a whole lot of speculation and no one really knows what's going on, but it's interesting.
Yeah, it's kind of like how the US has banned products from that is it Xinjiang region in China that are made out of that cotton that's farmed with like slave labor.
Oh, I haven't seen
and
this.
So they get it's like a rule where you're not allowed. US company, or you're not allowed to import into products from that region. So China just has international intermediaries that it sends the cotton to, that turns it into textiles that are not from China, even though they are from China.
Yeah.
And then American companies can buy from these international intermediaries. So it's kind of like this cotton laundering scam.
Yeah.
But it sounds kind of like that, but slightly different in reverse a little bit.
Yeah. There's if there's a will, there's a way. So it would be surprising if they did end up having a bunch of those high end graphics chips. Yeah.
All right, shall we move on into some earnings reports? Hamish?
Yeah, let's do our Meta Alphabet. Big advertising giant.
The Double.
Yeah, the Double. Yeah, exactly. Do you want to take us through Meta
right.
first, and then I'll take us through Alphabet?
Yeah, sure. So I've got stats for Meta's Q4. They posted their obviously their quarterly earnings and also their annual earnings. Their 12 months ended December 31st, 2024, and it was good. It was good. Stock didn't do anything crazy. Didn't move so much. But like the statistics coming out of Meta are pretty solid. So I'll tell you we'll start with 3 months ended December 31st. So year over year, we had revenue up 21%, costs and expenses only up 5%. And overall that helped their income from operations rocket from 16.38 billion in Q4 2023 to 23.4 billion. So it's up 43%.
Wow.
Year over year.
Impressive.
Quite impressive. Operating margin rose to 48% from 41%. And overall net income rose 49% from 14 billion to almost 21 billion for the quarter for Q4.
Yeah.
So
a 48% operating margin is just actually insane. Like,
I know.
To be able to have a margin
That's
like
wild,
that. And they've
isn't
had, I mean, this has been a growing margin for a number of years now. I mean, obviously we've seen the performance of not only Meta, but also Alphabet. But to have a margin that is consistently like 20, 30% or higher is as good of a demonstration as you'll ever need that they have something unique. Because if anyone could offer something that they, similar to what they have, but at a lower price, they could still operate at a 20%, 30% margin. If they could cut their, offer the same thing, but the same ads, but at half the price or something, that business would still be a great business. So the fact that they can operate at a 50% margin is just says that nobody can offer what they can offer, which is it's insane.
it's a phenomenal competitive position to be in.
Yes,
And they've really, as I'll talk about in a little bit, they've really they've taken full advantage of their competitive position and have turned themselves into an absolute financial fortress.
Yeah.
But yeah, so that's like the stats of Q4 over Q4. Now we can also do 2024 over 2023, and it's much the same story. Revenue was up 22%. So 2024 they generated $164.5 billion in revenue. So quite a handsome sum. Of that, they kept income from operations 69.38 billion. So even for the 12 months, the operating margin was 42%, quite staggering. And I'll say their income from operations, that number I quoted, up 48% year over year, which very, very impressive. Net income was up 59% year over year for the full year ended, up to 62.36 billion. So absolutely astronomical rise in their net income from 2023's 39 billion to 62 billion.
Ridiculous.
It's a handsome sum of money. And I'll skip over. I'll go straight to the balance sheet because we're kind of talking about it now. As you were saying, Hamish, this kind of financial performance, it really has helped them, become a very strong business over a long period of time, and that is reflected in their balance sheet. They've really bolstered their balance sheet with this advantage that they have. So they've got $43 billion in cash. They have $34 billion in short-term marketable securities. So they got a lot of cash just kind of sitting around or very close to the chest. And overall, they have $28 billion in long-term debt. So they actually have more just sitting around in cash than what they have in long-term debt. They have current assets of $100 billion and current liabilities of $34 billion. So there's not too much that could rock the world of Meta, I would say.
No. It's quite a safe balance sheet. Arguably the safest.
But of course, yeah, one of the safest. Yeah, you could argue that Google's up there as well. It's a very safe balance sheet. Not to mention that it's a flawless investment because, of course, these companies normally trade at a steep premium because of their competitive position. But yeah, it's very impressive. But moving on to some more operational stats. Family daily active people was 3.35 billion on average for December 2024, an increase of 5% year over year. So somehow they still continue to grow that little bit. But some juicy stats that we like to look at anyway are impressions, so ad impressions and price per ad. So I've got the stats here, Hamish. Ad impressions delivered across our family of apps increased by 6% and 11% year over year for the fourth quarter and the full year, respectively. So up 6% for the quarter in terms of impressions, 11% more impressions in 2024 versus 2023, and average price per ad increased by 14% and 10% year over year for the fourth quarter and full year 2024, respectively. So a 14% rise in average price per ad in the fourth quarter, a 10% rise in average price per ad in 2024 versus 2023. That's pretty impressive. I'd say that's pretty solid. There was I don't know, when was it? There was a time where we were a little bit concerned about these kind of numbers, but I don't think there's too much to be concerned about in that suite of financial data.
No.
What's your take, Hamish?
Yeah, well, I mean, yeah, I think this has certainly been the story for quite a few quarters now. They've demonstrated these very impressive, not only an increase in the number of ads, but also the price per ad. But yeah, there was a time, as people started to spend more time on Reels and these kind of Reels and stories compared to Feed, where they're not looking at the ads for as long as they would previously on like desktop as well. There was a concern that how that shift would ultimately look in terms of ad revenue, but it seems to be the case that people are spending an enormous amount of time on short form content, so they're getting served a lot more ads, and the price per ad, so the effectiveness as well of those ads has been able to improve, or at least advertisers are willing to spend more and more to get in front of those users. So they've always been quite good at the ads game and adapting to different changes as the different products have changed over time for social media. That's always been Meta's bread and butter. So they've been able to handle it pretty well.
Yeah, it's very impressive. A couple of things from the call. I haven't actually listened to the call. I was just kind of reading up about what was said. It's on my to-do list. So on the call, Mark said he expects 2025 to redefine the company's relationships with governments. Of course, you would say that, the bloody suck up. He says, quote, "We now have a US administration that is proud of our leading companies, prioritizes American technology winning, and that will defend our values and interests abroad," Zuckerberg told investors on a call. Quote, "I am optimistic about the progress and innovation that this can unlock." On top of that, the company's Meta AI chatbot surpassed 700 million monthly active users. The CFO, Susan Lee, told analysts that's up from 600 million in December. Zuckerberg says he expects Meta AI to reach 1 billion users this year. Do you use Meta AI that much?
I don't think I've used it a single time, so I'll have to have a look.
I've only used it by accident.
Actually, that is true. I probably have done that as well. No, I haven't. I haven't done that much experimenting with Meta AI. Even Gemini, to be honest, either Alphabet's AI product. But I'll have to have a bit of a look. No, I my understanding is it's a little bit behind the others.
I have a question about this Meta AI because Meta AI also functions as just the Messenger, Instagram, Facebook search bar.
Mm-hmm.
So, like, if I like went to my Instagram search bar and I looked up Hamish Hoddock because I want to see your profile, is that counting me as a Meta AI user? Even though really I'm not. I'm not using Meta AI.
That's a really good question, actually.
Like, I'm just searching for you. You know,
that's a good question. I would like to think no, but now that you've put it that way, it's entirely possible that that's why they integrated it that way.
700 million monthly active users, aka 700 million of our 3.3 billion users has used the search bar in the last 30 days.
Yeah, I don't know. It's a good question.
Yeah,
it's a good question.
We shall see.
Yeah.
It says, quote, "Once a service reaches that kind of scale, it usually develops a durable long-term advantage," Zuckerberg told analysts. And also the last thing I've got to add on Meta is the last thing, their Reality Labs segment. Hamish, your favorite part of the business. I remember hearing you say that if you could keep one part of their business, you would keep Reality Labs.
I actually do like that Reality Labs business. I don't know why the sarcasm. I don't mind their business.
It's fun, but I don't think it would be your number one business.
No.
That you would keep.
No. I
mean, you might keep the advertising business first.
Yeah, no.
Maybe
it's a bit of a speculative gamble, which I like to watch, but I don't want to participate in. But
But breaking news, their Reality Labs segment also posted its biggest operating loss to date for a quarter. It cost the company $5 billion in Q4, and I chucked in the chart so that you can see the trend over time. Hamish, how would you describe that trend?
It's getting a lot worse. Yeah, they're losing a lot of money. They're losing a lot of money on it.
There you go.
Yeah, maybe
it's getting a lot worse.
But something good might come out of there soon. Maybe. You know, the thing with Reality Labs, I mean, from a business investing perspective, it's a bit of a money pit, but they are coming out with some interesting things. At least, some of the prototypes and demos that they do, I find really interesting. So I always like looking at like what's happening at the bleeding edge of technology. But yeah, from a Meta, well, if I was a Meta investor, I would be. It's not fun to see the losses kind of stack. And erode what is essentially a massive cash cow.
I think investors would be less lenient if advertising just wasn't as insanely profitable as it is at the current time. They might get a little bit more annoyed.
Yes.
But
Yeah.
Anyway, that's Meta, Hamish. That is Meta. You wanna keep rolling? We'll talk about Alphabet.
Yeah,
One
let's
advertising
do
giant to another.
Yeah, let's do Alphabet. Let's see the other side, the slightly bigger side of the duopoly in the digital advertising market. In terms of the fourth quarter, revenue came in. This number is crazy. Revenue for Alphabet in the fourth quarter was $96.5 billion. So they're almost doing $100 billion a quarter.
Jesus, that is wild.
Which is just the stupidest number. It's an insane number. So yeah, almost $100 billion a quarter. Of course, it was the fourth quarter, so that's not entirely accurate. It's not like they're going to do $100 billion every quarter going forward. The fourth quarter is always very, very significant.
Even still, though,
but
that's phenomenal.
But
that's double what Facebook's doing or what Meta's doing.
Yeah, so very significant. That's a 12% year-over-year increase as well. So not only is that number huge, they're still growing at double digits somehow. In terms of the segments, Alphabet has a number of different ways that they generate advertising revenue and then other types of revenue. The main category is search and other, which generated $54 billion of revenue, which was up 12.5% year over year. YouTube ads came in at $10.5 billion for the quarter, which was up almost 14% year over year. Network advertising, which is kind of the banner ads and stuff that are the dying banner ads on websites that everybody hates, and there's just a growing number of them.
Good riddance.
It came in at $7.95 billion, which was down 4%. Down 4% year over year. So that's continued to shrink as a business model, as a revenue stream. Subscriptions, platforms, and devices came in at $11.6 billion, which was up 7% year over year. So this includes YouTube Premium and their Pixel phones and those sorts of things. And then the last significant category is their cloud business, which came in at $12 billion, up 30% year over year. So cloud, of course, is their fastest growing business, and it's now the second biggest revenue category, I just noticed, in terms of individual
it is indeed.
individual items. So and it's still growing at a very significant rate. So it's cloud is clearly going to be, or clearly Alphabet is betting a lot on cloud being a very big part of their future and their growth. To do it in terms of clicks and the kind of cost per click, which is what we kind of spoke about with what you kind of went through with Meta in terms of impressions and the cost per ad. I think I'm not exactly sure what you said they were called, but Google names them a little bit differently. But in terms of the number of paid clicks on their ads, for Google search, this increased 5% year over year for the full year in 2024. The cost per click also increased 7%. So similar kind of results to what Meta was experiencing, both an increase in the number of clicks and therefore the number of ads essentially served, and then also an increase in the cost. Interestingly, in terms of their Google network advertising business, so again, this is the banner ads and pop-ups, the cost per impression increased 10%. So the cost for these ads went up, but the number of impressions went down 11%. Far less of these ads are being kind of viewed than previously.
That makes sense. Yeah.
And so
interesting.
And so it's a dying part of their business, but they've more than made up for it with search continuing to be a beast, YouTube ads continuing to grow, and of course their cloud business continuing to grow.
Yep.
The traffic acquisition costs, which is kind of their main cost to essentially acquire traffic to be able to serve these ads, came in at $14.8 billion, which was up just under 7% year over year. So revenue growing at 12%, their main costs only growing at kind of mid to high single digits, and the result of that is that I don't even have their profit figures here. I forgot to somehow missed putting it in, but I'll come back to it.
You silly bugger. That's all right. You can get that up right now as I tell everybody an unbelievable statistic.
Okay.
An unbelievable trivia thing about Google that I didn't know until I heard it in a podcast the other day.
Yeah.
The original name for Google. There was a name before it was called Google.
Oh.
And the name, do you know what this is by chance, Hamish?
No, I haven't heard this.
The original name for Google was Backrub.
Oh. Okay.
Yeah. How weird is that?
Well, like they dodged a bullet with that one. I'm glad they didn't stick with that.
Yeah, I know. But I'm thinking like, if they had gone to market and properly called this thing Backrub,
Yeah.
I actually don't think it would have I just don't think people would have used it. I don't think it would have become a thing.
No.
I don't know. Maybe I'm wrong because maybe it was just so good that it could have been called anything.
No, that's not great. Yeah. I'm glad they changed that.
Yeah.
That's it.
It's pretty weird.
Thanks for that. Thanks for that little trivia.
According to Stanford's David Kohler and Google's own website, Page and Brin's 1996 foray into the world of search engines was initially called Backrub.
Oh, there you go.
They called it this because the program analyzed the web's backlinks to understand how important a website was and what other sites it related to. There you go. Backrub operated on Stanford servers until it eventually took up too much bandwidth. So yeah, anyway,
there you go.
Sorry, that was a bit of a side note.
Yeah, okay.
Back over to you, Hamish. I forgot where we were.
Yeah, thanks for that. Thanks for that little break while I figured out what I was missing. Okay, so in terms of operating income, Alphabet produced $30.97 billion in the quarter, which was up from $23.7 billion in the same quarter last year, and represents a 32% operating margin. So, yeah, very similar to Meta. They're growing the top line at a reasonable rate. Costs are not growing as quickly, and so their bottom line is growing very fast and operating at a very high margin.
Yeah. Well, what did you say the margin was? 30-something percent?
32%.
Operating margin?
32%.
32%.
Yeah.
I mean, what were we talking about? Operating margin 48% for Meta. Even 32% is still phenomenal. And Google, we have to think, it's not quite the same business as Meta. Meta's pretty much all advertising, which is going to be extremely high margin. I think Google has a few more strings to its bow that operates in a few more areas than Meta. Has some businesses that are lower margin. So
yeah,
all that kind of plays into it, I think. But 32% is still phenomenal, right?
Yeah, exactly. There are some like slightly different dynamics between the two businesses. Yeah. You know, search is Google search is enormous compared to even any of the social platforms that Meta offers. However, in order to generate that revenue, there's this significant traffic acquisition costs that they have to pay Apple to be the default search results and to be the default search engine on their phones and all of these things. So there's kind of there's a toss up, and the result of that is lower margins, but higher revenue. In terms of the balance sheet, they're also a financial fortress, just like Meta. $96 billion in cash and marketable securities, which would be short-term government bonds, essentially to store their cash. So nearly $100 billion in cash and cash equivalents, with just $11 billion in long-term debt. They have now $171 billion of property, plant, and equipment, which was up almost $40 billion from last year, and most of that is AI infrastructure. So they have an enormous, almost $200 billion worth of property and equipment now. For the full year in 2024, they spent $52 billion on CapEx, and they're not slowing down. They announced plans to invest $75 billion in CapEx this year, focusing on AI infrastructure to advance their AI capabilities across their services. And so they're not only spending an insane amount on CapEx, it's only going to go up. at least for this year. So crazy. Some of these numbers just they sound so fake. In terms of distributions, they did $62 billion of share repurchases. Spent $62 billion on their own, buying their own stock, which is crazy. Another $7.4 billion on dividends, which they now pay. And the market wasn't too happy about it all. The missing expectations on cloud revenue, as well as this announcement that they're ratcheting up their capex once again, led to the stock falling 7% in the quarter. So there you go. Those are the two.
It's terrible. 7%. It's a garbage business. I'm getting rid of it too. Throw it out. Throw it in the bin. Dead to me.
Yeah, exactly. Yeah, no good. Terrible business. Get rid of it.
And there you go, eh? They're the two advertising. Should we wrap things up there, Hamish? We've been going for almost an hour, 57-ish minutes. We've got more companies to talk about, but we might tease that for next week and kind of pause it there. What do you reckon?
Yeah,
you reckon that's a good plan.
Yeah, I think that's a good idea. Yeah, we're well into the tech companies now for this earnings season. And there's a lot more. There's so many more to come. I was taking a peek forward while I was doing some of this DeepSeek research to see when Nvidia was going to report, because that's always now going to be a fun one. They're reporting at the end of February, so that's still a little while away. We've got so many of the big tech names and other important companies for the market to come. So we'll be certainly covering a number of those over the next few weeks. And seeing how the market reacts to it all.
Yep, sounds good. My voice box appreciates us finishing up now.
Yeah. It's
and I go back to bed.
Good idea. Well, with that said, thanks everyone for tuning in this week. We'll be back next week. Thanks to Seeking Alpha for sponsoring as always. And thanks, Brandon, for joining me. And we'll see you guys next week. See you later, guys.
All right. See you guys.